Good afternoon, traders and investors. It's Will back here with another one. Ooh boy, big drop today. And then the bulls were able to kind of recover and buy the dip into the second half of the day, guys. But this was definitely a big surprise in the morning. Gap down open, leading into further pullback. So this is basically off a ISM report. Also, part of the jobs, right? So the jobs came in a little hotter than expected, which kind of gives the market the impression that the Fed can continue to increase rates for the next two potential meetings, basically in July and August, right? So with that being said, guys, I want to take a look at the heat map today because it was a pretty bloody day. As we can see, everything except for Microsoft and Apple that reversed into the end of the day because they were also red during the day. Pretty much everything on this board is bright red. So no sector was safe today. No sector was safe on the relative performance. As you can see, guys, every single major sector in the red for today. So what does that mean? We are going to look at some charts and figure it out. As you guys know, we were looking for the daily higher lows. Have they been set with today's move? Tomorrow's data, especially with NFP numbers, right? The non-farm payroll employment numbers is going to be very, very crucial in my opinion. I also want to take a look at yields, which is something that I never do, but they have broken a specific pattern that I've been watching for a while. So I think it will be adequate to take a look at them. So coming off of that, let's do these charts relatively quickly here, guys, because not that much has changed. It's coming into our expected scenarios. We did have a gap to fill here. We filled it with today's move to the downside, right? And closing above our 12 EMA. So what were we looking for? The daily higher low. Still a potential for the bulls to just be setting a daily higher low for potential move higher. I think that tomorrow's data is going to have a big impact, guys, whether we start breaking down further below and start testing these lows, 431.28, which is the line in the sand level for me, or whether we push and start testing our most recent highs and moving into the 450 area. Very, very crucial day today. But one thing is for sure, guys, when you see all the major sectors hitting lows of the day and red at the same time, and there's absolutely no rotation whatsoever, that is synonymous with money leaving the market. That is a bit of fear, which was also indicated by our VIX. The VIX was up a tremendous amount today. Earlier in the day, it was up about 16%, now only up about 9%, but very, very notable to us, right? Look at this VIX move. Early on in the morning, absolutely massive move, right? So if we take it here from bottom to top, maybe it was even more than that. I caught it at 16, but it was about, right around 15, 16% bottom to top on the VIX. Very broad market move to the downside, fear in the markets over the jobs numbers, pricing in potential for further rate increases. So bulls are still alive, still looking for the daily higher low. Keep an eye out on tomorrow's data is going to be crucial. QQQ, same thing, looking for the daily higher low for the continuation of the daily uptrend. All is not lost yet. Line in the sand, 358, right? If we start pushing lower and lower and lower and testing this area, you open up the doors for a potential daily downtrend to commence. If that will be the case, we will look higher on the weekly to gauge what type of pullback we will be getting. But tomorrow is a very crucial day, guys, whether we continue and push back up into the highs or continue the bear move down and lose these 12 EMAs on QQQ and SPY. That is what I'm looking for. XLF, big red day on XLF, but did a better job than most of recapturing most of the day, right? The bulls did a great job on all of these charts. All they did is basically they recaptured everything from the open, right? You can see we recaptured everything from the open, but we were not able to fill the gaps from the overnight trading sessions. It was a very, very bad day in international markets, which is why we came crashing into the open here on the US markets as a whole. But financials here, financials did okay. They reclosed in my little resistance zone here. So keeping the 3350 crucial level alive here, keeping the 12 EMA alive, only looking for a daily higher low as well. Bulls still have a lot of space, right? Decent amount of space to still make that happen. But guys, tomorrow will be crucial whether or not we lose this 12 EMA or whether or not we start pushing into highs. The daily uptrends are still a potential here. XLV, very messy, right? This kind of broad range right here, not really giving us any indication of direction whatsoever. On the weekly, we are still pretty much in a tightening range. So once again, levels to the downside, 130 to the downside to be watched. If it breaks this week or next week, will be notable. We'll be heading into the lower end of this range here, potentially further tightening up. So we got the 130 to the downside here, and then to the upside, 133.30-ish, right? If you need the bull break for the weekly trend to the upside confirmation. IWM here, still trapped within our range. Brutal day on IWM today, top to bottom pretty much, right? If you take with the gap and everything, right? Very, very red day at the peak, guys. 2.67% of drop. That is a very notable drop to me. This is playing into what I was saying was a negative factor. If it was to do this, if you go back to yesterday's videos, we were looking for the daily higher low. It actually, and something like this, right? It actually broke way below. So now the best that we can hope to get is some form of tightening range. Obviously, you do not want to lose this green area of support that I've marked right here, right? 180.50 all the way down to 178.50-ish, right? This is the zone, in my opinion, very, very crucial zone. Why? Because we would not want to lose the potential weekly uptrend, right? If you keep this range alive, you keep the possibility of the continuation of the weekly uptrend. If you lose it, you really start to give the potential of losing the weekly uptrend and going for more consolidation in this disgustingly wide range that we've been in, right? So need to hold this area. If we do start coming down into this area, guys, I will be reloading my put options in the 175 to lower 170 range. Dow Jones, very, very, very unfortunate. Lost the pattern. So could IWM and the Dow Jones, since they've lost the potential for a nice bullish move to the upside, right? Setting a daily higher low high, are they potential leading indicators of what might happen to SPY and QQQ? That is something that I'll be looking out for heavily. But at this point, Dow Jones, the double top area is kind of confirmed, right? This was the worry. Yesterday's title of the video. Double tops here on all of our major sectors here. Dow Jones was no different. What were we looking for? I'll remind you, we're looking for the inverse head and shoulders, but the bears are putting up a fight at this resistance area. 34,500 is the level to the break to the upside. What I don't want to see, guys, is a break of 33,600, line in the sand level to me. If you break that, you open the potential for the daily downtrend formation. As of now, though, they can still save it and form somewhat of a tightening range up in these higher areas here, but line in the sand level, 33,600. Watch out for that, okay? If inflation fears do start to resurface here, it may be good for the value names, because I'll remind you what rallied first in October when the inflation fears resurfaced as to inflation tipping back up here in core and other services. What happened is that you got a very, very big move in our value names. So if inflation does rear its head again in the next few reports, will the Dow Jones be able to benefit from this same type of move and smash above while technology takes a breather? Remains to be seen, but that's a scenario that I'm keeping on the table for sure, right? So a lot of names, look out for them, guys. Look out for potential Estee Lauder. Look out for beaten down names like Nike, right? Look out for beaten down potential financial names like Charles Schwab and whatnot. Could be some good opportunities to be had in those names. Now, want to take a quick look at yields, guys. This on the 10-year yield is what kind of worries me, right? I was watching this chart very, very actively, didn't promote it on the channel too much because I was looking to see if we were getting a break above of this trend line and then down below, or whether we were actually going to break higher. Well, we broke higher. The 10-year yield is now at levels not seen since March, pretty much predating the banking crisis, which is also relatively kind of high in the broad scale of things, right? So keep an eye on the yields. They're getting dangerously high again as the markets, once again, price in for higher rates for longer. The 2-year yield, which is what a lot of people look, guys, honestly, today, it was a very, very big day early in the morning, right? They gave a lot of it back. Intraday gave about 3% back. But when this candle was green, we actually broke all-time highs, which was predating the banking crisis, right? So keep an eye on yields. Very, very important. The 2 and 10, otherwise known as the measures for the yield curve, right? So keep an eye if yields keep spiking, how much will they peak off at before we start actually pricing in our terminal rates on the 2 and 10 for the bond traders. Crypto taking an absolute wash today. As you can see, all of this crypto list, except for Solana, is bright red. Bitcoin in jeopardy of losing the pattern. Keep an eye. Daily is not looking good, but on the weekly, we still have tons of space to set a weekly bull flag, higher low, and potentially continue the move to the upside. Crypto was not immune to broader market weakness today. This level for me is crucial. Pretty much 30,000 all the way to 29.5. Very crucial zone. Are we going to continue to tighten up, or are the bears going to push through and set us up for a potential daily downtrend, which would lead us into more weekly consolidation before potentially finding our weekly higher low compared to here, right? And then potentially giving us another leg to the upside, back up into the 31 area. So very important next few days of trading for Bitcoin. Watch out for this level specifically. It's going to be a very big level of support that bulls do not want to lose. Apple, great intraday recovery by Apple. Look how we opened up here on Apple on the hourly. Gap down below, and then all day pretty much we continued to trade higher as the bulls bought the dip on Apple and Microsoft, known as two of the more safe plays here. They bought the dip on a lot of big tech, but Apple was notable to me. Still have not lost the 12 EMA, guys. This has been the subject, the theme of the videos, right? Filled this gap now entirely. So the daily higher lows, right? 182.66. We were always looking for the daily higher lows, potentially set with today's move as we touch the 12 EMA. Keep an eye on that, guys. Resistance obviously going to be all-time highs, right? But to the downside, it's actually significantly lower, right? 183 level is really where you want to keep an eye on. If the bulls keep giving back, and we pull, we open up for a potential daily downtrend. But as of now, no red flags on Apple, guys. If the bears cannot capture Apple and Microsoft, it's going to be very hard for them to push the markets down in a significant fashion, especially in technology. Amazon struggling to keep this 12 EMA, right? Gap down open, wasn't able to do it. On the hourly, you can see they tried to push up higher, but ended up kind of giving a bit of it back to the end of the day. What I'm looking for here on Amazon, right, is going to be 127.22. We're almost there, guys. Crucial level. That's our daily higher low level. So keep an eye on this level. We are right there. If we break it, we open up for the potential of a daily downtrend formation, which would bring us up into the lower levels with some potential weekly consolidation. So keep an eye on that. But if bulls are able tomorrow to bring us up and close this gap and close near the higher end of the range, it opens the door for the possibility next week of smashing this big 131.50-ish resistance, right? So now we're kind of trapped in this very tight range. Tight ranges tend to break hard when they break. Obviously, we still have a bullish lean, but very close to losing my line in the sand level. So keep an eye on Amazon. Obviously, you guys know I like Amazon down in this level. So if it does drop, I will be buying down there. Google did a good job of recovering, keeping the daily uptrend formation potential intact, alive. Big drop today, but once again, the bulls were able to kind of recapture and push above open levels slightly. We still have left a very big gap all the way up to 122.66 to be filled. It is pretty much a mixed chart. We're battling here in the support area, very big support area that's held in the past, right? But you know, you kind of have to wonder, guys, if the bulls lose most of the rest of the market, right? So if QQQ and SPY continues to come down and it weighs on our big tech and they're not able to kind of support the market in a big way, could open the floodgates here for some more downside on Google. This green box is my target levels for Google, so anywhere between 110 and 104 pretty much. If we do start coming down, I will be looking for options in this level right here. I think it provides some very good weekly support. We are still, guys, in a weekly bull flag, right? Line in the sand level, 117. In my opinion, since we've made a higher high than last week's high, right, cannot lose that level. Absolutely cannot lose this level. You can see it on the daily as well if we want to maintain the potential for the furtherance of the daily uptrend, but we need to get out of this resistance, this support zone, guys, right? So 122.68 is going to be the level that I'm looking for the bulls to break over the next few trading days. If we break down below, watch this 117 level right here. Crucial level for Google. Microsoft at this point. Microsoft, 12 EMA. right? Respecting the 12 EMA. Keep an eye on Google, right? Google below the moving averages. What's notable about Apple and Microsoft still have not lost the 12 EMAs, right? So the bull chart is intact, right? The daily uptrend is intact. The bulls still have a good run at it potential. All-time highs pretty much are going to be a resistance. As you can see, right? These are the all-time levels, guys, on these charts, Apple and Microsoft. All-time high resistance. For me at this point, guys, you know, you really wouldn't want to see the bulls lose 328.50. 328.50 is line in the sand. If they lose that, open up the possibility for that daily downtrend. But as of now, no real red flags on Microsoft except for this potential head and shoulders pattern. But as long as the bulls don't lose these moving averages in a significant way and head down to our neckline here at 328.20, well, the bulls are still alive on Microsoft. No real red flags yet. There would be a big red flag if we start moving down lower into this area right here, right? Microsoft, for me, in terms of a buy, I'm looking between the 300 and 280 level, which you guys may find low, but that's just where I'm looking for potential retracements on Microsoft specifically. Meta here, Meta doing a great job here of holding up, right? Yesterday put in a very nice day here, almost a 3% day. Today giving a little bit of it, little bit of that back today, right? And the RSI is no longer overbought despite our heavy move up, still looking slightly decent on the weekly. If we do close the week with a little doji here on top, not that big of a deal. We've done that before and still continue to grind higher the weeks after, right? Like you've seen it a lot in the past. Here, it did translate into some downside, but there's a lot of times it didn't. So you can't really trust the candle formations too much. What I'm looking at, guys, 12 EMA, just like Apple and Microsoft, 12 EMA. The line in the sand level for me on Meta right now, 280.8. That is going to be a very big level. Lose that level, open the potential for a daily downtrend. As of now, no real red flags. We are just looking for our daily higher low and to potentially grind higher. If we do continue to grind higher, I've mentioned it a bunch of times, the gap fill area is 300 to 315. 300, obviously a big psychological level of resistance here, but 300 to 315 is going to be the last area of our gap fill. So bulls have their work cut out for them. But if the broader markets continue to grind higher, it would not surprise me if Meta does continue to fill that gap. But if we get broad market weakness, guys, you know, it may be time for Meta to cool down. The next few days of trading are absolutely crucial for all of these names. Keep an eye out for the 12 EMAs and the crucial levels that I've given you guys. If we start losing them, it opens up the possibility for daily downtrends, and that would mean weekly consolidation. Excuse me. Now, let's go on to our Nvidia, right? Nvidia surprisingly doing a great job today of holding up. I'm actually very impressed by how Nvidia held up on the morning here. Gap down open, right? And really ran hard right into the close, trying to recapture these moving averages on the hourly. What I'm looking for, same thing as yesterday's video, guys, right? We're looking for the daily higher low. Do not want to lose 404, this 404.50 level here. Do not want to lose that level. The bulls still have a chance of making that daily uptrend happen. If they do, looking at all-time high resistance. But if we break down below, guys, open up once again possibility for a daily downtrend, then this level represents your weekly support, right? So first things first, we're going to look at the 404 level, but if they lose 404 significantly, opens up the potential to head down to our weekly lows, and that would not be good, right? Because you give the bears a lot of space at that point to potentially set weekly downtrends. But we're not going to get ahead of ourselves. We're taking this one day at a time. As of now, all-time high is your resistance, and your 404 is your line in the sand level. Keep an eye, they're holding the 12 EMA. You'll hear me repeat this level a lot. Love that moving average. Tesla holding up better than most today, actually. Didn't give up too much gains. I was actually impressed because there was a very big gap to be filled down here, but Tesla wanted absolutely no part of it. If the bears really had an opportunity to crush Tesla, in my opinion, it would have been today. The fact that they didn't is kind of notable to me. They don't really want to give back too much, right? We're still kind of battling here with a bit of bearish divergence. As you can see, right, whenever the chart points up, higher highs, and the RSI is lower highs, you kind of have a bit of bullish divergence here. So keep an eye out for that. That's why I say, like, it wouldn't be surprising to me if we do potentially get a gap fill if the market acts weak. But for now, Tesla bulls holding up really, really well. What are we looking for? Once again, daily higher lows, right? Keep an eye. Gap fill territory and the moving average are at the same location, 265. So keep an eye out on that 265 level over the next few trading days if we do get down there. However, anything above 241-ish is just a daily higher low with continuation. Don't panic. Bulls control the monthly, they control the weekly, they control the daily. So any pullback is pretty much for just a higher low on all of those time frames, right? Lot of space for bulls to work with. If we do pull back into the 265 area, right, over the next few trading days, I'll be looking to be writing puts anywhere below this 240 all the way through my green zone, as I do believe on the higher time frames, this represents a really good area here of kind of broad support for this name. Obviously, you don't want to lose 241 because that would kind of put in jeopardy the weekly move, right? You really want to hold that for a potential weekly higher low into 300. But if we do come down here, I do believe it's a good area for bulls to kind of accumulate positions in here, kind of struggle, and then kind of push higher. So I will be looking for options in that level because I do feel if we do push down that low, we'll get a pretty decent bounce. PayPal losing a bit of steam today, guys. Not gonna lie, it was a brutal day on PayPal. They were so close to making a new high, right? But just could not do it. So once again, we get rejected. We're trending right here at our line in the sand level here. 65.50, right, is the line in the sand level. So we're so close to it, guys. The best the bulls can hope for at this point is somewhat of a tightening range before potentially moving higher. But if we break down below, guys, it's not going to be pretty for PayPal, I must admit. Opens up the potential for a new daily downtrend, which kind of sucks to use that term, right? Because we were so close to getting our daily uptrend breakout once again. But at that point, guys, it is currently a nice weekly bull move. So we're looking at this point for weekly higher lows. So the daily trend may be lost, but keep in mind, we are looking for weekly higher lows at this point. Anything above 59.50 will just be weekly higher low on the weekly 3 weeks in this same area. So it is a weekly bull flag, right? I just need the bulls to get above these areas of resistance here. That'll really consolidate the fact that the weekly uptrend will be in motion and that the daily uptrends as well. So crucial levels here. Palantir doing a great job as well of recovering intraday. Barely holding on to this 12 EMA. Yesterday's video, I was pointing out, we are just looking for daily higher lows on Palantir, right? The bulls have created enough space to where that becomes a distinct possibility. If they pull back any lower, you open up for either best case scenario, a tightening range, worst case scenario, a potential daily downtrend if we do lose 1364. A line in the sand, 1364. Very, very important level. But for now, the bulls are looking somewhat decent. It looks like they do want to hold here. Keep an eye, guys. The break of 1575 consolidates the fact that this will be your daily higher low. Until we get that break, it's anyone's game, right? So keep an eye on these two levels. A break of this, your daily uptrend is intact. We're going for the 52-week highs. A break to the downside at this point, right? Keep an eye, 1364 on the weekly, right? Crucial as well. This is potentially your weekly higher low. So if we come down here and lose that, it would potentially be a weekly downtrend, and that would not be good because those usually take some time to reverse. Palantir for me, decent buying opportunities anywhere from $13 to $11. I think that would represent a decent enough pullback on all of the higher time frames, right? So that is definitely something we're looking at. For now, it does look like this is our weekly higher low. And it wouldn't surprise me, guys, if the markets do uphold here and we do just price in these negative expectations right away and just continue to grind higher. Palantir should be able to hold this daily higher low and set itself up here to recapture its daily uptrend. So that's pretty much all the stocks that I did want to go over today. I hope that this was helpful for you today. Right before I do end the video, guys, just remember this one thing, right? Very, very crucial. When you see a big red day, understand where it's coming from. If you look at QQQ and only QQQ is red and SPY is slightly red, and then you go on to see the major sectors, XLF, XLV, you come to the heat map, you see there's some actual rotation. You see that some of our sectors are indeed green. As long as you see rotation, it's okay. That's healthy market rotation. When you see broad market sell-offs, it means that the market is pricing in a larger fear-driven catalyst and people are exiting the market as a whole. That's why everything is red, right? And try to hone in on what that catalyst is. So today it was good news is bad news. The jobs didn't come in terrible at all. They actually came in quite decent, quite close to expectations, right? So the labor market is extremely tight. So it gives Jerome Powell the capacity to continuously raise rates as he sees that, number one, the economy is healthy, as we got recent GDP reports last week, and that unemployment and jobs are relatively good. So what that lets him know is that the market could potentially, suffer 2 more rate increases and be fine. So that's why people kind of panicked today. That's why international markets also panicked today as well. So was a key point today. And as as we had mentioned, the VIX had kind of been wanting to curl up here in the past few days. We did get a little pop, but just the fact that we were able to grind it back down over the course of the day and that the bulls were able to buy the dip once they kind of got over the shock of gap down open into flush pretty much. That dip buying, in my opinion, was healthy. It signifies a healthy market overall. And the news wasn't bad, guys. This news was not bad. The only bad news to really watch out for will be later on in August when we get the July inflation. June inflation is expected to come in quite low, as a matter of fact. But if people keep spending hard throughout the summer, in August for the July data, we may get a little uptick in inflation, especially core inflation. That's what a lot of analysts have been talking about. So that could be a broad negative catalyst for the markets. But as of now, we haven't got one today. As of now, the only negative catalyst that we got today is good news with the jobs report. Jobs being decent was taken as bad news because it gives Jerome Powell that extra buffer to say, okay, everything's not as bad as it seems. The market could potentially afford 2 more rate hikes, right? But this is good. We're working towards terminal rates and we're combating inflation in the way that we should be. So take care with that, guys. Happy trading tomorrow. I love you all. Consider liking, consider subscribing the video. I appreciate all the engagement that you've been giving me, guys. I really enjoy doing these videos. So show some love if you do have time to do so, and keep an eye out on the charts for tomorrow. Happy trading day. Let's wrap it up in a good way for tomorrow and on to the weekend. I'll catch you guys tomorrow. Take care.